Welcome to the Explainer. Today we're diving into a company that's got everybody talking. BitMine, ticker BMNR. Now, this isn't just another crypto miner. People are calling it the ultimate Ethereum treasury play. It's a strategy that has some analysts seriously predicting a tenfold return. So, we're going to break down what that actually means and see if the hype is for real. So, yeah, here's the billion-dollar question, right? Could BitMine really be the next 10x crypto stock? That's the kind of number that gets the market buzzing. In this explainer, we're going to dissect the entire strategy. We'll look at the numbers, and we're going to figure out what it would actually take for this company's value to just take off into the stratosphere. And this is the number that's at the very heart of all the hype, a staggering $500 price target. Now, this isn't just some random figure pulled out of thin air. It's a speculative target that some analysts are calculating, but it's based on a very specific set of things happening, mostly tied to the future price of Ethereum. So we got to ask, how in the world does a stock go from where it is now to there? Let's find out. All right, to really get this, we're going to walk through it piece by piece. First, we'll break down the core concept. What exactly is the Ethereum treasury play? Then, we'll get to know the company itself, BitMine, and unpack all the powerful arguments for why it could succeed. After that, we're going to get into the math behind that wild $500 prediction. And finally, we'll bring it all back to earth and look at the risks you have to consider. Okay, first things first, we need to get our heads around the foundational idea here, because this is what makes BitMine so unique. This isn't your typical story about mining crypto. It's about a whole new corporate strategy that could totally change how investors get exposure to digital assets. So, what in the world is a corporate treasury play? Well, it's actually a pretty simple but really powerful idea. You take a public company and it uses its cash, its treasury, to buy and hold a massive amount of another asset, like a cryptocurrency. And just like that, its stock basically becomes a proxy for that asset's value. This gives traditional investors a way to bet on something like Ethereum right from their brokerage account. No crypto wallet needed. And hey, if this strategy sounds familiar, it should. Just think about MicroStrategy, ticker MSTR. They went all in on Bitcoin. They used their company funds to buy billions of dollars worth of BTC. And their stock price is now tied at the hip to Bitcoin's performance. Well, BitMine is running the exact same playbook, just with a different superstar asset, Ethereum. They're positioning themselves to be, for Ethereum, what MicroStrategy has become for Bitcoin. Okay, so that's the what. We get the strategy. Now let's talk about the who. Who is the company actually pulling this off? Let's take a closer look at BitMine. Because to really understand where they might be going, you have to understand where they came from and the huge pivot they made from being a miner to a massive Ethereum accumulator. So, BitMine, you'll find them on the NYSE American as BMNR. They didn't start out this way. Their original business was actually in Bitcoin mining, and they were pretty well known for using this cool, innovative immersion cooling tech that made their operations super efficient. But the real story, the game changer, was their strategic pivot. They shifted gears hard and started aggressively buying up Ethereum. And the whole operation is being led by Tom Lee, a seriously respected Wall Street veteran, which gives this whole venture a ton of credibility. I mean, look at this. When we say they're a leaning, we're not kidding. You can forget about diversification here. This is a highly concentrated bet. Something like 85% of their treasury is in Ethereum. This means BitMine's fate, its success or failure, is almost completely tied to the price of one single asset. And just to put their commitment into perspective, get ready for this number. 3.31 million. That's not dollars. That's the number of ETH tokens the company reportedly holds. At today's prices, that position is worth billions and billions of dollars. This isn't just dipping a toe in the water, folks. This is a full-on deep-sea dive into the Ethereum ecosystem. All right, so we know the strategy and we know the player. Now, for the really big question. What is driving all this hype? What are the specific arguments that have analysts and investors so bullish, so incredibly excited about this company's future? You know, this quote really nails the core of the bull case. The belief is that Bit is creating a flywheel, right? A self-reinforcing cycle. They buy a ton of ETH, which gets investors excited and drives up their stock price. That higher stock price lets them raise more money, which, you guessed it, they use to buy even more ETH. It's like this self-feeding machine for growth. And a huge part of this is that they keep buying even when the market is down, which just screams conviction. And the thing is, it's not just one thing. The bull case is built on a whole combination of powerful factors all working together. You've got the insane speed of their ETH purchases, a stock that's super easy to trade, which attracts big money, and this massive head start that some say is basically impossible for anyone else to catch up to. Then you throw in Tom Lee's reputation, which brings in both the big institutions and regular investors. Add some positive chart signals the traders love and the potential to get into a major stock index, and you've got a seriously potent recipe for optimism. Okay, this is where it gets kind of wild. This chart, it just lays out their sheer dominance in black and white. According to the data in our source material, BitMine doesn't just hold a lot of ETH. They hold more than the next 70 largest entities combined. I mean, wow. When the bulls say their head start is impossible to catch, this is what they're talking about. And this brings us right back to leadership. This quote just highlights how absolutely central Tom Lee is to this whole story. You know, in a market that's so driven by trust and sentiment, having a well-known guy with a solid track record, that's a massive, massive advantage. He knows how to talk to the media. He gets the big picture, and he can attract capital from pretty much everyone. All right, time to tackle the elephant in the room. That $500 prize prediction. The number that's grabbing all the headlines. How on earth does anyone get to a number like that? Let's pull back the curtain and deconstruct the math behind this very speculative prediction. Okay, before we go any further, let's be crystal clear about something. This is super important. This price target is not a guarantee. It is a speculative model. It's a forecast that completely depends on a few key assumptions about the future actually coming true. If any one of those assumptions turns out to be wrong, the whole model just falls apart. So, let's walk through the recipe. Step 1, and this is the big one. You have to assume that Ethereum's price hits $12,000. Step 2, you figure out the company's net asset value. That's just the raw value of their ETH stock divided by the number of shares. At 12K ETH, that's about $113 per share. But, and this is the key, stocks like this almost always trade for more than the raw assets are worth. That's called market premium. So, in step 3, you apply that premium. Let's say 1.6 times. That gets you to about 181. And then step 4 is where you factor in future growth, which could push that premium even higher. And you can see here it's not just one path. Look at how things change depending on the variables. Even if ETH stays at 12 grand, see what happens if BitMine keeps buying and gets up to 5 million ETH. And what if the market gets really excited and pays a higher premium for the stock? A 2 times premium gets you to 242. A 3 times premium all the way up to 343. It just shows you how leveraged this whole play is to both their buying strategy and just plain old market sentiment. So what does it take to bridge that gap to get from around 350 all the way up to that magic $500 number? Well, you need what the source material calls a perfect storm. We're talking about a full-blown peak crypto bull market frenzy. You need massive mainstream media hype and a market so euphoric that investors are willing to pay an absolutely explosive premium for the stock. It's the absolute tippy top end of what's possible. Okay, we've heard the hype. We've seen the big numbers. Now, it's time for a reality check. For every bull case, there's a set of risks. And to get the full picture, we have to look at the potential downsides and the challenges that this investment thesis faces. Well, the biggest risk, and it's not even close, is their total dependence on Ethereum. If ETH's price tanks, BitMine stock is going right down with it. It's that simple. Second, to keep buying all this ETH, the company has to raise money, and they often do that by issuing new shares. That's called dilution. It basically means your slice of the company pie get a little bit smaller every time they do it. And finally, that market premium we talk so much about, yeah, that's not guaranteed. If the market mood turns sour, that premium could disappear overnight. So, when you boil it all down, here's the main takeaway. Investing in BitMine is not the same thing as just buying Ethereum. It is a leveraged bet on Ethereum's future. You're betting that this specific strategy run by this specific team is going to juice the returns and, yes, potentially the losses of Ethereum's price. It's a bet on the whole package, the thesis, the team, and the asset all rolled into one. And so, at the end of the day, it really comes down to this one question for you. Do you look at this and see a calculated strategic play on the future growth of the entire Ethereum network, or do you see it as a high-stakes, all-or-nothing bet that really needs that perfect storm to pay off? The answer, well, that probably depends on how much you believe in Ethereum, how much you trust the leadership team, and frankly, how much risk you're willing to take on. Don't forget to subscribe, and thanks for watching.